Hello everybody, my name is Victor, you're in the official CScalp channel and I'm glad to welcome you here. Today's video is the first from a free course which is organized by the CScalp team specially for beginner traders who just entering the cryptocurrency market. Crypto market as we see today is very volatile, powerful and dynamics, so it gives us a lot of interesting situations which provide us of course with a good profit. So during the course, you will understand how technical analysis work, how to analyze order book and the transaction tape. So all in all, you'll have the all necessary basics that will allow you to trade successfully. So firstly, let's see the plan for today's lesson. Firstly, we're going to talk a bit about all the necessary things to do before the lesson. Then we'll discuss the main foundations that help a scalper to make a decision about a trade. So we'll look at three main components to make a good entering point. After that, we're going to see what is a trading plan and how to create it. Then how crypto market moves and what kind of entering point to work on firstly. And finally, how the technical analysis work on the crypto market and gonna see the most popular patterns that are working on a cryptocurrency market right now. So the first step is to understand what to do before the lesson or before the whole course. So the first step is to create an account on Binance Exchange. Today, Binance Exchange is the top exchange and point of liquidity. So it has the majority of volumes of the whole market. Also, there is an opportunity to trade futures, which is one of the key elements because in our in trading scalping, we use both the spot and the futures. Uh, Also, the commission, I mean, the whole crypto commissions are not so big, uh, but the futures commissions are a way lower. So, and also futures helps us or not helps. The futures allow us to use leverage, which is very important, especially for scalping. The next step is to verify your account to get an opportunity to make deposits and withdrawals straight through the exchange. The best way to verify your account is through the Binance mobile app. The next step is to download this scalp for free, launch it on a computer. And by the way, all the links about the launching, about the downloading the free scalp version are below, of course, in the description. So we're going next, and the next step is to set up the CScalp, to set up all the instruments, volumes, so make it more or less comfortable for you for working with. The next is one of the probably interesting things is to deposit through the straight transaction from your card, which is allowed after the verification. And the main question is how much to deposit. Well, we recommend to deposit $10. However, you can make like 50 or 100, and it will help you to enlarge your capital way faster rather than you start from 10. But we don't recommend you to make some risks in the beginning of studying scalping. So probably it's better to donate like 10. And the final step is to understand risk management, volumes on different instruments, choose the most volatile instruments. So prepare your working place before starting. Uh, Finally, I would say that trading has to be comfortable and everything has to be on its place. And only from this moment you can trade successfully. Well, after you made all the preparations, we can move to our first theme. This is the point of entering the trade. We're going to look at three key elements for every scalper to make a successful entering point. Successful entering point will give you a successful trade and as a result, of course, a good profit. So let's just list them. The first key element is a graph. Then it goes to order book, which consists of two, let's say like two elements. The first one is transaction tape, and the second one is the limit part of the order book, let's say like that, or market depth. And finally, there are tokens with the most liquidity on the market. We'll talk about them a bit later. So analyzing all these listed things together, you'll be able to create an entering point and work according the trading plan. Firstly, it seems like very easy. Analyze graph, find some levels, looked at the limit part of the order book, find some volumes, then the transaction tape. Okay, it's green or it's red. Then just notice that the Bitcoin is, for example, rising. Then just bought an instrument and got profit. However, it's not that easy because every trader analyzes the market according to different perceptions. For example, there are traders who has a suspicious attention to a graph or to a transaction tape. There are some intraday traders who analyze only the graph and trading only according to this element of a trading plan. However, I will recommend you to be flexible and to analyze all the factors. So making an entering point like a puzzle from all these three factors that we're going to talk about. So you take a graph, then add the transaction tape, add the market depth. Finally, look at the BTC, and then we'll create a trading plan which will be formed from these three key factors. So let's just look at them. Let's just look at every element in details. Firstly, let's take the graph. This component matches two parts. The first one is technical analysis or technical formations, like levels, resistance, support, patterns, triangles, flats, etc. And then there is a price action. We as a scalper don't use some indicators or things like that. And uh, after we highlighted some figures on the technical analysis, we have to understand and create possibilities of, um for example, breaking through a level or bouncing from it, and the skill of, let's say, reading a graph, so understanding the price action helps us with that. Let's take an example. For example, the price is going to a level of resistance very sharply, like without any corrections. So just a sharp, just a powerful impulse. Uh, and here, the scalper traders see the graph, they see the price action, and the opportunity that the price will bounce from this level according the price action that I described below. The possibility of bouncing from the level is a way higher rather than breaking it. So in other situation, like the price is going not fast but and not low, just make a lot of flats before the level, or made an impulse and standing in a flat before the level of resistance. Here the possibility that the price will break through this level a way bigger rather than bouncing from it or just making flat on it. So this is how we interpretate the price action. uh, So if you make a right interpretation of a price action, you won't have problems with making on expectations where price more likely to go. So from the graph, we take the first idea where the instrument can go, the first possibility of the price movement. Okay, guys, when you find first signs of price action this way or another, you need to find an approval because we are flexible traders, as I said before, so the order book will help us with that. It also has two parts. The first one is a limit part, or in other words, it's called order book or the market depth. Um, in the limit part, we look at the bids and asks, working with big volumes and robots on both futures and a spot. It's one of the key factors to look both and the futures on the futures order book and the market and the spot order book, because, for example, there can be a very big volume on the spot order book, and you'll see it and bounce and try to catch a bounce from this volume on the futures order book. However, on the futures, there won't be any mm, big volumes, so there won't be any reasons to open the position. Uh, well, the thing is that the limit part of a market book don't make don't make a movement on the market. It just creates uh, somehow a misbalance between the number of buy and sell orders. So it gives us more reasons to open the position this way or another. For example, like long position, or if you're selling as a short position. Also, we have to analyze transaction tape because it displays all the market orders. So here we analyze the amount of demand and supply on the market right now, right in the moment. So in other words, we understand the power of buyer or power of seller, and with the help of that, we'll try to analyze this tendency, mm, and make a possibility of where the price is likely to go. So guys, when we combine first two elements, for example, we see the pattern, the really good pattern according to the technical analysis. We analyze the price action and understand that, for example, according to the price action right now, there can be a really impulsive break through the resistance level. Okay, then we look at the order book. We find a very big volume in the both in the spot order book and in the futures market depth. Also, we analyzed the transaction tape and understood that here the majority of buyers, so probably will continue going up, so will continue rising, and there will be the waiting breakthrough. So we're almost ready to open the position, or probably already opened it. Their most liquidity tokens come. All the market is dependent on Bitcoin. Probably you've noticed that before when the Bitcoin is going down, like almost all the altcoins are going down. Like go is high, all the market goes high. However, it's not always. So the power of correlation is different in different times, let's say like that. So there are some kind of seasons when the correlation is lower. So when we find an entering point or already entered the position, we have to look at Bitcoin or Ethereum, but mostly on Bitcoin. For example, if we entering the long position, it's likely that Bitcoin is growing or at least is flattening. And when we opened the short position, it's likely for Bitcoin. It's likely for Bitcoin to go down or at least flattening. However, it's better going down because the downtrend mm, is more powerful when the Bitcoin is falling. So never open the trade according to Bitcoin, according to the BTC. This is like take it as a rule. So never open a trade. For example, if the Bitcoin uh, is growing and or probably it's falling down. Like let's take if the Bitcoin is falling down, for example, and you see, then I'm gonna short, for example, Litecoin. You're shorting it, however, the Litecoin is not going so fast or not going at all. So you got a loss. Your nerves are not very good condition. So uh, again, never open the trade according to BTC, but as an additional factor, you have always to count it. And when opening the position, look at it. Mm, for example, if the BTC at least not going the opposite side. So finally, scalper trader analyzes the market according to the graph, so technical analysis, price action, the order book, so the transaction tape, and the limit part or market depth. And finally, the most liquid tokens, so BTC or Ethereum. So the composition of these factors is like a puzzle forms puzzle which is forming a trade plan. And according to the plan, you make the possibilities of the price going this way or another. So sometimes the graph will be more important. Sometimes in order book there will be a lot of different volumes, yeah, a lot of big volumes near each other, and you'll understand that here is better to change the direction of my trading, probably to trying to catch the bounce. So you have to be flexible and to analyze every factor. Well, now we're going to the next theme, and this is the character of cryptocurrency market moving. And here we'll try to understand what points and ideas to work on. So, what strategies are the most perspective in trying the most profit and bringing the most profit? Well, firstly, I want to say that everyone highlights different perspectives and different strategies. So I just want to say that this is just my own opinion. However, according to our experience in scalping crypto and a lot of statistics, which has been accumulating for a lot of time, I can say that these strategies really work. The character moving cryptocurrency market is relatively easy, and just this character gives us a clear vision of different trading situation. The character moving is very typical, and the price goes from one flat to another, from one consolidation to consolidation, like from one consolidation as we can see here to another one. It's a new market, and there are not so many robots, etc. In the same time, liquidity is nice. So where is liquidity, there is effectiveness, and technical analysis works here very well. So from one flat to another, as I already said, we can see it here. So here is the consolidation, then the impulse, then let's say a little consolidation, then the continuation of the impulse, so another one, there is correction, so another consolidation, then again the impulse. So as the market goes, as I described right now, uh, we can use different time frames, and there is a thing about time frames. No matter what time frame you use, a day time frame or a 5 minute time frame, the character moving the market will be the same. The only thing is that on a day time frame, for example, let's take here is a very big day consolidation where you can have a lot of different little consolidations. If if it is 5 minute time frame, all these consolidations will be inside the bigger day or an hour consolidation. So as the market goes, it's not very difficult to notice what to look at and what strategies to use. Well, firstly, this is the flat breaking entering point. So it's number first. It's hand number one. There are most like these strategies is the most perspective and the most understandable. Uh, like the most understandable point, and this is the best. It has the best ratio of risk to profit, so they're most powerful and profitable. This is the basic strategy, and the majority entering points are made according to that strategy. I mean, my entering points. Uh, well, it's very simple. So you see the consolidation, you see the level. So here is the maximum, or it can be a minimum, like here. Uh, and we're trying to catch the position, to catch the price while breaking this level. This is the first strategy. However, there are more interesting situations. So firstly, we try to break the level, as I said before, and while the price is breaking it, so while the moment of breaking, the volatility on the instrument is rising a lot. So the number of participants are also going up. Big volumes appear like while the moment of breaking, there are the volumes like really big, and there emerge the opportunities to trade the continuation of the movement, so of movement. So here is the number two strategy. Is so here we're trying to catch points of increased volatility. Uh, we're trying to catch the impulse for the moment of continuation. Here we're trying to work with big volumes, market ineffectiveness, so such type of trades is also perspective and interesting. It also brings good potential because the number of such situations is bigger rather than, like, for example, the first situation. Okay, after we took the impulse, probably saw here some big volumes or some points, some local highs, and trying to catch the continuation uh, of this movement, we can take a bounce from the level. So this is the third strategy. To here we can see the level and the price often bouncing from it because there is no, it's a kind of rule like there is no rising up without the correction. So we can take a bounce from the level. Trading bounces could be very easy if you're trading it from big participants. I mean, if on this level, we can see in the market book that here is the really big volume and trying to bounce it. Uh, or if you are trade like it is harder if you are traded according to turning patterns or catching knives, for example. Mm, well, I would say that I don't recommend catching knives. This is like a separate strategy, uh, which can appear quite difficult for the guys who just entering the cryptocurrency market because there you have to uh, catch almost all the prints on the transaction tape and analyze it very fast. So it can be quite difficult first times. Mm, okay, when the instrument is active, I personally don't trade bounces or some like return patterns because they're less understandable. I mean, for me, and risks are higher. If you're not an objector of a counter trend and you understand well how the market work in this particular moment, so the third entering point is right for you. However, market gives a lot of good situations for a counter trend. So after, I mean, well, here uh, we came to our fourth strategy is trading inside the flat. To be honest, experienced traders avoid trading inside a flat because the volatility here is not so high as it was, for example, in the breaking of the level, and the according to that factor, the ratio of risk profit here is less. Moreover, the commissions are hitting our wallet because when you trade a flat, there will be a lot of trades. I mean, a way more trends rather than you, for example, trying to catch the impulse, because the volatility is lower and you always re-entering the position, let's say, trying to re-enter the position. Uh, However, if you're good at understanding the low volatile market, this is also a very good strategy to trade, especially for you, I mean, because here you can take, let's say, more movements, like one, two, three, four, five, for example, in one flat. It's bigger rather than catch one impulse. So to sum up, the cryptocurrency market is moving quite typically and the same time technically from one flat to another, like I mean on every time frame. Our first target is to take an impulse, it's trying to catch the impulse, uh, then trying to catch the continuation of the movement, working with like big volumes with other participants, trying to catch some local highs here. Then we're trying to catch the counter trend, so trade the counter movement, and finally trading a flat movements. So here is the character of cryptocurrency market. Okay, guys, let's see what do we have next. And here we're going to our final fourth theme, and these are the basics of the main patterns and formations on the cryptocurrency market. So the first of this are levels. So there are two types of levels, the support level and the level of resistance. I want to say that every formation is constructed from different types of levels, whether it is a minimum or a maximum. So horizontal levels can be drawn according not only one touch, as it depicted here. I mean, like here we see the counter trend. So the price is rising. Then probably here is a very big volume standing, so the price is bouncing from it, so we have a new high or a new low. However, we can draw this level not according just one point, one high or one minimum, but according to a very big number of of touches, I mean, and it forms so-called flat. So the more times the price touches the level, the better, I mean, the stronger the level is. So when you understand how the level works, so we're going to smooth levels. This is also the very popular thing in the crypto market. Also, there are some different strategies how to trade it, but about this we'll talk a bit later. So the smooth level is when the support becomes the resistance, so, and vice versa. So here we see the picture when the price is rising, so we're breaking through, probably here gonna be a flat or something like that. We're breaking through this previous maximum of the price and then retest it from another side. So in this example, the level of resistance becomes the level of support. So this how we call the smooth level. They also good for working as with bouncing and with breaking it. So then we're going to dynamic levels or slop levels. So the same as the previous one, they very good for working as with bouncing and with breaking through it. I personally use them for breaking the trend, so trying to catch the breakthrough impulse. The minimum number of touches to form a dynamic line is 2. Of course, they can be formed with 3 or 5 touches. And I want to say that the more touches, so uh, the more minimums or the more maximums, if it is a resistance, we have, mm, so the better or the more powerful will be the impulse. So here we can see dynamic support, so every minimum is higher than the previous one, so minimums, a row of minimums, uh, and here we can see the dynamic resistance. So here the maximums are lowering, so we have this maximum, then the next maximum is lower, and the tendency is continuing until there will be a break through this resistance. So when you finally understood all the formations that we've discussed before, then we're going to learn, some more complicated things. Here we'll see formations for movement continuation. So there are three such main formations. When you start drawing formations, remember that every part of it, every participant of the market has to see them on the graph. This is kind of a reflection of traders, a reflection of, traders' feelings and emotions. So when you search the formation, for example, let's take a triangle, we'll discuss it. So if you found a really good triangle, in your point of view, you have to think, is this triangle visible? Is this really visible to other participants of the market? And if it is, so it's like very easy to find this triangle. So the more possibility that the price will give a really good impulse one way or another. So here is our first formation, and this is flat. So we don't have to guess here where the price will go. So we just have to wait till the instrument come to one or another boundary. Then to find some other reasons in order to uh, to analyze other foundations, so other components that we discussed before, and to make a trade. For example, you see here that uh, is the price is moving from high to minimum, from local high to minimum, so consolidating somehow. And one moment, for example, here is the really big volume, and you're seeing that the price is going up, so it's rising. And for example, you've seen in the transaction tape that there is so many buys, then this volume will be just eaten very easily. So you open the trade here to continuation of the impulse, of the rising impulse. Okay. So here we go into our next formation, which is also works really good in the cryptocurrency market, and this is a triangle, or triangle with two equal sides. This pattern, or this formation, as you want, is formed from two dynamic lines, as we can see here. So this is the dynamic resistance, this is the dynamic support. The triangle is the same flat, however, with constantly lowering interest to the instrument. In other words, before the triangle, there is an impulse, so you can see here. So we have the impulse first, then some participants closing their positions on the level of resistance, and they continue trying to push the price higher, however, not having enough power every time. So as we can see here, there goes the impulse, then probably someone is fixing profit here, really big profit that makes the price bounce from this level. So, and then again, trying to rise the price, however, not so powerful. So make it like a consolidation where the maximums are lowering, however, the minimums are rising with every time. So here we can see our triangle. So everybody is waiting from buyers and sellers to overweight with the help of fresh market participants, and the price is going up or down. So here we're just consolidating, measuring the power of buyers and sellers and waiting for some really big fresh volumes, which will allow to push the price higher or lower. I mean, to break through the dynamic resistance, or if we're going down through the dynamic support. Also, in a triangle, we can point out local minimums or minimums and add your just a minimums and add your position in the breakthrough of every local level. For example, I mean minimums or maximums, of course. So here you can see that we can draw a horizontal lines on every local maximum or every local minimum. It means that if you want to enter the position, and of course before analyzed before some other foundation components like transaction tape or order book, and found some really good reasons for continuation the impulse. For example, you can firstly enter the position on breaking through the previous local maximum, then add here and also adding here, and just to catch this impulse. Okay, here we go into the next is the triangle, so-called triangle with pressure line. So it's formed from a dynamic support, as we can see here, and a bunch of maximums which are forming a horizontal level. Of course, this level won't be like really ideal. It's very rare when you can see this formation like it's ideal, that we have here the dynamic support, and this is mm, like a very ideal level when every previous impulse bouncing from the same level. It's very difficult to find it. However, if we have probably something the same here, like uh, they're almost the same, let's say like that. Mm, so we have, finally we can say that this is the pressure triangle. So they're also waiting for fresh participants. I mean, here sellers are trying to push the price, and the ideal situation is when you have a really big volume here, which is not allowing the price to break through. So the first touch, the second one, then the third, the fourth, and then the fresh power comes on the market. So we eating this big volume and just breaking through. So guys, a little summary here. So in this part, we watched the most common, the most popular patterns or formations on the cryptocurrency market. So let's say like the first 6 formations, they were the basics. So somehow they are the former parts of more complicated patterns. So we've seen here the bouncing level, so the level of support, the level of resistance, and the level of support. Then we've seen a flat, so how these levels can form a flat. So then it goes to the level retest or the smooth level. So rising, breaking it, then retesting and continuing. So this is kind of the continuation formation. Then we go into dynamic support and dynamic resistance. Finally, there are 3 most common patterns for the movement continuation. This is the flat, where we're waiting and trying to find other reasons, other important reasons, and probably in the transaction tape or in the order book to continue the impulse. Then this is like the most popular formation in the market is the triangle, and then the pressure triangle. Well, and just in the beginning of your scalping practice, I would recommend you to trade only these formations and patterns because they are considered to be the most understandable and easy to trade. So you won't have any problems trading right these formations. So we're going next, and here we're gonna see the patterns that leads to correction. So that leads to the opposite movement. And in other words, they are called the counter trend formations. So firstly, here is the double top or double down, and this is quite the easy formation because here we have the participants who are waiting the return to the previous maximum to close all their positions. So it's very logical. Let's see the picture. Here we got the impulse. Someone is taking profit here. Then logically there goes the correction. And other participants, because now they have less profit than they had here. So they are waiting while the price returns to the previous maximum. And right here, they're push sell and get their profit back. So the price is returning and the correction is starting. So the same thing is working with double down. So we're going to the next one, and this is the head and shoulders or inverse head and shoulders. This is kind of a rare figure, but it works really, really good. Now it's considered to be very powerful and impulsive formation. So it's a very clear formation in point of that we have to wait till it's finally constructed with a clear neck level. So as it goes here, so here is the neck level is the level of support. Here is the level of resistance. So after we've seen uh, the fully constructed pattern, so this is very easy. Uh, just to enter the position on for the continuing of the movement. So as we can see here, the impulse correction, and another impulse, and we already formed the neck level, and the only thing that is left is to open the position here, open the short position for the continuation of the movement. The same thing works with inverse head and shoulders. And finally, we are going to two last formations, and this is the false breakthrough depicted here and the jack. So the false breakthrough is forming when the price is staying above the level after a breakthrough. As we can see here, the candle is closing above the level. However, the next candle or like a number of candles return the price under the level. Uh, so we're just seeing the correction here. Almost the same thing works with the jack. So the price is breaking, and after the impulse, after the breakthrough, it returns. So it returns back and leave only its shadow below the level, or I mean above the level. It depends on the situation. However, it closes right on the opposite side. So again, we see the correction movement after. So these were the patterns of the correction or the formations of the counter trend. And now we're gonna see some trades, guys. Okay, guys, here I want to show you one of my trades on the instrument, which is called Litecoin. So this is the Litecoin futures, and this trade was made on the continuation of the impulse. So breaking through the height border of pressure triangle. So here we can see the impulse. First, I'm gonna show you the graph, and then gonna show you the order book. So we're gonna see the impulse here, and then the price is going to consolidate and making like a little flat here. So finally I understood that this is the pressure triangle, and my strategy was made according to that situation. So I was trying to catch the breakthrough. So okay, guys, here firstly I want to say sorry that my CScalp is set up in Russian. Well, but I guess I hope that it won't bring any discomfort to you, so everything will be understandable. But I mean, like in Russian and English, all the market books are like nearly the same. Let's see what is going to be here. Firstly, there was support of something like 5,000 contracts, and I decided just to open the first part of my position here, right here from this price. So, and you can see here also the levels. This is firstly, this is the level uh, of the border of the triangle, and finally, here is the local maximum, which is the main target, and on the spot, so on the main instrument of on the main, I mean, Litecoin instrument on the spot order book, we can see the support 5,000 contracts. And as I said, firstly, I opened the position from the big volume, then trying to catch the border of this pressure triangle, so the upper border, and finally, on the renewing of the local maximum, the final part of the position is going to be taken. So we can see it here. So the volume of the position is like 200 lots, and um, the stop loss is behind the big volume. So firstly, we're seeing the impulse, and I'm waiting for the price catching the border. So here, like a little movement. So the buyer is trying, let's say, is trying to win. So the majority is taking the majority, and I'm making a delay order straight on the breakthrough of the high border of the pressure triangle, and it opens, so it adds my position. Now the volume is 250, and I also, so higher, you can see that the impulse and continuing, and I'm making another delay order for the impulse continuation and breaking the local maximum. So here we're seeing very active buyer. So the price is coming, and my order is opening. So we can see that the support, there is a little support of something like 1,500 lots on the futures. So, and the impulse is continuing, and I'm trying to close the first part of my position here, like the added part that was made something like it was 100 lots. So I'm trying to close that because it's like a rule. Remember that on the first impulse you'll have to close. It's like an advice to close the first part of your position, something like 1/3. And I'm just waiting here, just waiting for the impulse to continue. So I put here the limit orders, limit selling orders. I want to say one thing, that the commission for these orders is lower, so I recommend to close the position with different parts, not like the whole position. So not to um, make an average price worse. So the more parts you have, the better. But I'm not telling about like 20 or 30. So we're seeing here that the impulse is continuing, and there is a quite large support on the futures order book, 8,000, sorry, 8,000 lots. So I'm just that means that the movement with a bigger possibility will continue, and I'm setting my stop loss right behind this big volume, and we can see here that there is another support that is lately realized straight to the market, like 7,000 lots. All this volume was realized straight to the market, and I'm trying to close here the position straight with the market orders, just to understand, just because I'm start to understanding that uh, that the movement is, I mean, very long, so it's going quite long to the heights, and probably we will see here the correction. So finally, guys, this was quite a nice trade. Everything was just done according to the strategy. So firstly, uh, we're trying to break through the higher border. Then we're trying to catch the renewing of the maximum, and then closing the position with different parts, as I said before. So just a standard trade. Okay, guys, here we're going to the end of our first lesson. I wanted to recall that all in all, we're going to have 3 lessons, because this is a 3-lesson free course provided by the CScalp team. I hope you liked the first lesson. Hope that everything was understandable and clear. So thank you very much for watching this video, and want to say that in the future, in the 2 future videos, we're gonna see in detail some more aspects of scalping. I mean, like the transaction tape, the order book, and all other factors that we mentioned here on the lesson. So finally, thank you very much for watching. Leave your comments below, and I wish you good trades and a lot of profit.